very good afternoon. Let's take a look at the markets. Asian stocks registered gains, tracking Wall Street's performance yesterday. This as market players are now factoring a 91% chance that the Fed will cut rates at the September FOMC meeting. And this is notwithstanding the impending global economic difficulties that will likely come with the US's higher import tariffs. The Nikkei share average rose by 0.64%. The Hang Seng Index gained 0.5%, while the Shanghai Composite Index advanced by 0.96%. US markets rebounded yesterday. It's said that market players took advantage of the lower stock prices falling, that is due to the plunge that took place in shares there on Friday. Investors are said to be optimistic that the Fed will intervene to support the economy following the latest worse than expected jobs number that came out on Friday. Tech stocks also drove a level of confidence on strong corporate earnings reports. The Dow Jones Industrial Average rose by 1.34%. The S&P 500 closed up 1.5%, while the Nasdaq Composite Index jumped 1.95%. Looking at the local market, we see that the all-share index is currently up 0.25% at 99,553 index points. On the currency front, we see that the rand is trading at 18.05 against the US dollar, 20.82 vis-a-vis the euro, and 23.98 against the British pound. Gold is trading at $3,356 an ounce, platinum at $1,309 an ounce, while Brent crude oil is trading lower at $67.99 a barrel. All right, let's get into it now with Makwe Masilela. He's Chief Investment Officer at Makwe Fund Managers. Thank you so much, Makwe, for joining us. So despite everything that's happening, geopolitics, trade tensions, and much more, I see that the volatility index is below 20, which is a signal that there isn't that much volatility, and shares are pretty much trading up today. So what's your reading of things?
I think markets got excited yesterday, making back all the losses that was made, not just for Friday, but for the whole of last week. If you think about it, for the whole of last week, the JSE was down not 0.9%, but yesterday, just on Monday, we're just up 1.6%. So I think now today, markets are taking it with steady to see exactly where things are going. But bearing in mind that we continue to be worried, given that the valuations that we see are very rich, and there's a possibility that we might get some pullbacks, why we are saying that, the economic outlook is getting darkened because we've got this higher unemployment, a possible inflation coming back, the trade wars as well. But hey, the fact that we expect the Fed that they will probably cut interest rates, not even once but twice, I think that is what is helping the markets for now.
Yeah, so perhaps a better barometer of how things are really looking in the global economy, and you've alluded to some of it, is the oil price. That seems to be coming down. How much does that have to do with OPEC flooding the market with more oil come September, and the perception of weaker global growth? And of course, I ask this at a time when we've just learned that the price of petrol is going to be decreasing while diesel and illuminating paraffin are going to be rising.
I think both, because OPEC, they've extended or increased their output, and we have seen that more than what we thought they will do. But at the same time, we're worried about the global outlook. The reason being, we don't know what is going to be happening with the trade wars. The point we're making is that if you think the economy is not going to grow, but at the same time, you start having more supply, then unfortunately, we will have an oversupply of oil in the market. And now it means that oil prices just have to go down, not forgetting those sanctions. That the US is busy threatening the likes of of India, because they continue to buy oil from Russia. But all these things continue to be at play, more supply, and there's no demand, then unfortunately that won't be favorable for the prices going forward.
So do we expect locally that the price of fuel will actually continue going down, even though we've got a mixed match on this occasion, but the trend will be down, assuming that the rand remains firm?
Exactly. If the rand continues to remain firm and oil prices continue to go down, by all means, we are guaranteed, to get low petrol prices. And that will also talk to our inflation going forward. And at the same time, also starts talking to our interest rates as well.
So Nedbank, they came out with their half-year results, reporting diluted headline earnings per share up 7% and revenue up 4%, and giving shareholders an interim dividend of 10 Rand and 28 cents a share. Your observations?
Good set of results, I should say, because the guys continue to make money from non-interest income. We've seen growth from that side. We've seen growth when it comes to revenue coming from associates. And also very important, we've seen an improvement when it comes to impairments. And we know because interest rates are no longer that high, bad debts are not longer as bad as they are. But that was unfortunately offset or partially offset by the fact that when it comes to an interest income, that was muted, the growth thereof. And by the way, the guys are selling their 21.2% stake in the EcoBank. This is the stake that they held for almost 16 years or so.
Grocery retailer ShopRite, they came out with their trading update for the year ended June. They anticipate earnings of between 15 and 25%. These numbers are looking quite decent in what many describe as a challenging environment, and they seem to consistently keep on delivering.
Definitely, sales up almost 9%, and the guys continue to gain market share, and that's almost for the past 5 years that they've been chowing into some of this high LSM market share. So they continue to do great. Hence, you can see that they open almost stores for every division that they have, whether it's clothing, whatever it is, they continue to open stores. And looking to the internal selling price inflation sitting at 2.3%, not too bad. And yes, we know that going forward, consumers continue to be challenged. But remember, this is food, and almost the core business happens to be food, accounting for almost 84% of their sales. So they'll continue to do well going forward.
Excellent. Thank you so much, Makwe, for your time and insights as always. That was Makwe Masilela. He's Chief Investment Officer at Makwe Fund Managers.